Ladies and gentlemen, welcome to the tech frenzy, the big tech frenzy, the fintech frenzy, the fin in tech frenzy. I still don't know. But that being said, we have SoFi to talk about, Shopify, Upstart, Robinhood, and yeah, we've got a couple things to talk about on the SoFi side. Obviously, there's been some new product offerings that they have been showing off, and one that was actually alluded to in their Fireside chat that happened today. So I want to talk about both of those. Shopify had their earnings today pre-market, and then Upstart had their earnings today post-market, and both of those companies saw unbelievable swings in their prices. So Shopify at one point was down like 8%, okay? Because obviously people get really worried that their guidance is always soft going off of Q4 and going into Q1. This is seasonality. They're an e-commerce shopping, decentralized platform, and so there can be a big swing due to holiday spend. However, unlike every year of the last 3 years where we've seen double-digit drawdowns because of the company, instead the company was down 8% and then ended up closing out the day. I think it was above 4% or above 3%. At one point, it was above 4%, went up into nearly $126 per share. But yeah. Someone said you can't spell Shopify without spelling SoFi. Little mix in the letter order there, but sure, I'll let you have it. But still, this was the unbelievable drawdown in Shopify before, once we saw the earnings. I mean, I wish I was able to get shares at 106. That's crazy. But then ended up closing the day at 123.59, at one point hitting 125.96. Wow. Okay. Yeah, and by the way, you can see here, 52-week high as well. Then in other news, we also have SoFi here today, down just 1.98%. It was looking good at the start, but then this was actually their Fireside chat, and then the Fireside chat ended, it spiked back up. So I don't know, maybe people were wanting him to say something else. Who knows? I got everything I wanted to hear. Loan platform business, technology platform, reiterating 2026 guidance. I got to get a little conspiratorial and then talking about 14 million members when that wasn't the guidance. It was a fun day for sure. Star Buccaneer says, I love Shopify, been long since 2019. Way to go. That's an amazing purchase right there. Yeah, 25% growth is for as long as the eye could see. 100%. Yeah. Oh, unless you're talking about SoFi. I mean, that might also be the case, but you may also see that in Shopify as well. I mean, they are just blitzing right now. We also saw good news from Robinhood. They're rolling out new products today, so that's fun. But let's first talk about SoFi's products that they actually unveiled, and I have a video here for you guys. Now, you may have already seen this in terms of the actual product, but maybe not this new press release, which is good to see from SoFi. Maybe they are, learning a little bit, because they've rolled this out and then there was actually no sort of marketing around it or anything. So the fact that they kind of did this a week late, who knows?
Introducing the all-new SoFi Plus, America's most rewarding financial membership, all in one app. Unlock $1,000 plus in value across banking, borrowing, investing, and more to get to your ambitions faster. Here's how SoFi Plus adds up. You get our highest APY on savings, plus a 10% boost on credit card cashback rewards, plus a 1% match on recurring SoFi Invest deposits paid in rewards points, plus unlimited access to financial planners, plus exclusive access to live music and sporting events, plus so much more.
And you can see from some of these ones that actually have the new beside it, these are actually very new. New rate discounts on student loan refinancing. That was true on the personal loan side, but that wasn't true on the student loan side, right? So they have all of these things that they're starting to add on, which, to be honest, are not massive offerings, but it's all of the extra additional features that might work for certain members that are actually getting onto the platform. And if you are getting, a student loan refinancing, that this extra discount is going to be worth a lot more than $10 a month. So that means a lot to the person that actually wants this domino, you know. But the ones that everyone are going to need is the ones that he said, right? The 1% match on SoFi Invest, the 10% boost on credit cards, which I think is a little bit, should be a little bit of a disclaimer, because some people might think that's 10% cash back. It's a 10% boost on the percentage. So if it's 2%, it's 2.2%. If it's 3%, it's 3.3%. Okay, so still amazing benefits, but just to clarify that for some.
Subscribe for just $10 a month or sign up with direct deposit at no cost and reach your ambitions with the Power of Plus. And now you could win one of America's top ambitions. Enter the Power of Plus sweepstakes today. SoFi, get your money right.
And the sweepstakes are actually seeming pretty interesting. I mean, it's a potential to win, I think it was a $400,000 brand new home, something like a $70,000 what was it, student loan, almost like certificate. They'll pay $70,000 towards your student loans. So awesome. Potentially that might boost the $10 a month for SoFi Plus, right? And the thing is like some people say, oh, well, $10 a month is cheap or is steep, but it's not steep if you actually consider that it could be free with direct deposit. And that's where the high majority of people will end up flowing to. And if you do have to pay the $10 a month, it's still worth it in the benefits. So, yeah, I mean, that's awesome. Anthony Noda described it in the call today being a little bit different. Not only is this to, obviously make a little bit of extra fee revenue, get, a deeper wallet share with their customers, but also a great attach rate for their other products. So if potentially you download the app, there is so many different tabs and areas where you can go within the SoFi app that you're not going to find all of them if you're just using it for a few services. But with a lot of people, they have this almost like sunken cost fallacy in a way, where because they're spending $10 a month, they want to get the most out of it possible. You see this through Costco, through Amazon, through any of these subscription services, where you want to use it the most to get your money out of it and sort of take advantage of what SoFi has to offer. So this means that the people that are actually paying the $10 a month have a higher chance of refinancing on student loans. They have a higher chance of using SoFi Invest for the 1% match over potentially the brokerage that they're using today. They have all of these extra things that are just great ads versus what you might get at a traditional financial institution. So pretty exciting. Now, on the other hand, there was also another product launched by SoFi that they highlighted about temporary interest-only personal loans. Now, you guys have heard me talk about this. I think that the overall market or total addressable market that SoFi could go after for personal loans is more actually sized towards the size of the overall credit card market, not personal loans. So Upstart actually just did their earnings, and we'll go through that. They had great numbers, but still, it's one of these things I find very similarly to Palantir, where yes, they beat on the upside, but the stock corrected so much to that pricing that I still think that it's valued very expensively to where you could have gotten it yesterday. So yes, they did get more or better earnings than expected, but then you're also seeing a massive run up in the stock, like 25%. So it's very expensive still. Now, the product that SoFi had hinted at launching is this temporary interest-only personal loan. Now, personal loans has been a smaller market because a lot of the reasons that people don't use them like other credit products is just the speed at which the funding actually happens. So they use it for much bigger projects, ones that can be paid out over a month or something like this. If you have some sort of large purchase order that you can pay by the end of next month or something like this, personal loans would work fine. Okay. But whenever you're talking about debt consolidation or something like this, you want some sort of revolving credit solution that can lower your, APRs on credit cards immediately, same day. And then you can go back out and then get, slowly pay that off, and then potentially you need more credit or something like this and have that sort of revolving balance at a lower APR. I think that this is super smart by SoFi. I also think them integrating this into the loan platform business is going to happen very quickly. So we'll have to see, right? This is a product that is not launched. It's something that they're talking about. So we could see this over the next few months, maybe Q2, maybe Q3, who knows? But it could be a big add to the actual loan platform business, which I think is everything that we need right now. B-Dub says SoFi stock will struggle until Q1's earnings results. That could potentially be the case. There's a couple things that might pique Wall Street's interests, similarly to how they might pique a firm's interests, right? Credit card data might show that they're pumping out more credit cards there. App downloads, website traffic. There are things that they try to monitor to get alpha there before the quarter actually comes out, but you're probably right that we need to wait for Q1 data. Let's see here. What else are you guys saying? Upstart is up over 26% overnight. Yeah, so let's talk about that for a second. I can end up bringing up the thing, and then we'll transition over to my spreadsheet as well. So a couple things is just what they did beating expectations. But if you guys don't know what Upstart is, it's essentially SoFi's loan platform business on steroids. Okay. They don't actually have their own platform. I mean, they technically do have loans on their balance sheet because they've had to sort of share the actual risk with their financial institutions that they're working with, because they didn't trust the rate of return that was actually going to happen. So there was a little bit of not so good loans that they ended up signing during a bad macro environment. But anyway, they work with 100+ banks, and they're using those banks' balance sheets to end up writing loans for them. And they have this essentially AI solution that is underwriting members for them at an unbelievable rate. So 91% of loans are are sort of fulfilled automatically without human intervention, and 93 of them have instant approval converted to fully funded loans. That's incredible. Okay. They're growing in multiple markets. They have HELOCs. They have small dollar loans, which is essentially overdraft coverage, if you want to think about it that way. They have personal loans. They have all these sort of different products that they're trying to get into, auto loans. So it is if you want to bet on loan platform business, is sort of the core, like, what do you call it? Like pure play loan platform business company. Okay. Now, with that means that they are very subject to the market. So whenever the macro is slow and financial institutions are not looking for loans, Upstart has a terrible time. But that's not really what people are expecting in 2025 and 2026. They expect really strong credit markets. So, Upstart is going to continue to pump higher. I could have told you easily that this stock would have done well before we even saw the earnings. Whenever you see, what do you call it? Affirm, Pagaya, and SoFi and Lending Club all showing off these great ABS markets, showing off great forward flow agreements. You know that Upstart is going to be in that picture, and it was guaranteed that they were going to show some great numbers. Now, we can end up going through and actually talking about their efficiency of the actual business, but I'd rather just show the numbers because I don't care too much for Upstart, to be honest. I mean, I'm not anti them. The premium's too high for me to want to make a bet on them, and they're extremely cyclical. What I love about SoFi is that they've gone through these periods of, having great macros, worse macros, a great fintech market, a worse fintech market, and they've always grown. Okay, even whenever Upstart completely died off from $400 down to low teens, SoFi continued to make more and more revenue and flow more to the bottom line. Like, this is what people don't give SoFi enough credit for. Is sure, they might not be explosive like the Upstarts or Robinhoods, but they also don't have the downturns like those companies either. Let's go ahead and take a look at Upstart's thing, which I apologize, it's not actually color coded. I'm using my old style of spreadsheet, which is just all together. And I don't have a lot of statistics on Upstart, but we have a couple we can go through. All right. So what I have here is their guide, which you can see in this other color here, as well as their actual Q4 numbers. Okay. So they were expecting $180 million of revenue, and what they actually got was $219 million. Now, I've talked about this many times about Upstart. You're not going to find a lot of businesses that can surprise on the upside in terms of revenue growth by 24% quarter over quarter. Okay. If there's a company that can greatly surprise in terms of their growth rates, it's Upstart. So you can see this here. That this is what they were doing before: 30% growth rates, 40%, 60%. It was an unbelievable time for Upstart. Okay. And then you could also see that there could be massive downturns as well. 30% lower, 6% lower, 30% lower, 26% lower, all back to back. So you went from 310 to essentially 100 million in revenue. You got your company got cut all the way down to 1/3 of its business that it was doing previously. But that swing can happen the other direction if the macro is back, right? And now the hope is as well is that the user base, the people that actually want the loans, stay sort of consistent, and their ability to be understood whether they're going to pay back stays the same. But Upstart's models get better and better over time. And so the efficiency of their business will improve, even if there's some ups and downs. The underlying foundation of like the technology does get better over time. That's exciting. Now, they highlight that to such an amazing degree. Like they really highlight their strength there. Oh, okay, well, this is how our models are getting stronger here. We're able to reduce these sort of inefficiencies and boost these efficiencies. And they talk about it in great lengths. Well, that's actually the exact same in every underwriting business. Like, you don't think that SoFi is getting better in their underwriting? Of course they are. But they don't highlight it or make it as easily known as what Upstart is doing. Okay. Upstart loves to tote AI. There's a lot of AI in SoFi's underwriting models as well. Maybe not to the same degree of automation, but it still absolutely exists. So you can see anyway how much that they outperformed this quarter. You were expecting essentially negative 35 million in net income. We almost broke positive. And then on an adjusted basis, they were expecting 5 million and they destroyed that 30 million plus. Okay, in the positive. Contribution margin 59% expected, 61% is actually what we got, which was really good for them. Just across the board, it was good. And even in the numbers that aren't in the guide, if we just take this away for a second, they still did very good. So look at the amount. This is their amount of dollars that they ended up actually underwriting, essentially. So whenever we talk about SoFi, they're doing billions and billions of dollars, but how much are they actually doing in terms of loan platform business deals? Well, they did 1 billion the first quarter, and then they did 1.1 billion the next quarter. So you're already catching up to some of these quarters that Upstart was doing. But now, to equal it out, SoFi went from 1 to 1.1, and Upstart went from 1.5 to 2.1 billion. Okay. But that's the thing with SoFi. You're not just buying $2.1 billion of originations in loan platform. You also have the loan platform, the tech platform. You also have the financial services. You also have the referrals for insurance and SMB and all these other things. So there's so much more that SoFi has to offer here, in my opinion. Don't shoot the messenger. But yeah, the conversion rate was absolutely stunning. 19% and 91% of that was fully automated. I think that's the highest number that they've ever put out. I don't think they've ever gotten higher than 91. Which, like, by the way, take a look at where this used to be. 67%, high 70s. Then we start to look into high 80s. Now we're into 90s, and that's sort of sticking right now. So it's interesting, right? The technology is getting better. And then also you have to look at the conversion rates too. The conversion rates actually, this is probably a macro situation, but the idea is that hopefully that this continues to grow. But actually what makes this very interesting is potentially if we get into a better macro in 2025 and 2026, potentially we could see this in the mid 20s or even higher. Knowing that their models are actually getting better would also be showing off that, we could maybe get to 30% conversion rate or something like this. But yeah, so I'm not an Upstart investor. I'm not trying to get people hyped on Upstart or anything along these lines, but this is amazing for SoFi. Okay. This is showing that markets are really hot on loans. Financial institutions want potential better underwriting, and they're willing to pay institutions a lot of money for that service. And Upstart even does some things that I don't personally agree with, like loan sharing agreements and everything like this. There's none of that at SoFi. There's no loan loss sharing. There's no payment, agreements over long periods of time or anything. It's cash up front, then you get your loan, done deal. Okay. Some people are asking me for, Jared here is asking me for comments on the 14 million members. So this was a comment. I can actually show you this here. Here, let me try to find it. Okay. I have found it. So part of the transaction, or part of the transcript for SoFi's B of A 2025 Financial Services Conference was that he said, you guys currently have 10 million members on your way to 14 million members. I just thought it was interesting that this was a highlighted segment of theirs talking about 14 million members, because where'd you get that number from? SoFi said they wanted to add 2.8 million. Right now they're at 10 million. So why aren't you saying 12 or on your way to 13 million members? But no, they said 14 million. Now, there's one thing I know, analysts actually get a lot of meetings with these institutions that are essentially not recorded, okay? Now, I don't think that they get to sort of trade on that information, but they get to clarify a lot of their concerns and everything, and then they write about it to their institutions. But it was curious to me that they said 14 million, because it just seemed like an arbitrary number. They're on their way. They're 10 million on their way to 20 million. Why say 14? So it's interesting. Is this an internal target for SoFi that they actually do think they're going to get 1 million members per quarter or something? I don't know. I got a little bit conspiratorial there, but yeah. This is why Noto fears Tanner. Why? Because everything that he would say to me, I'd nitpick and be like, oh, well, you know what? He said, I don't know. But everyone's doing that. You got to have some fun with it, or else what's the point? Upstart quoted me 17.8% for a loan of $50,000, and I got one at SoFi for 9.8%. Well, so SoFi and Upstart don't compete directly, okay? One thing that Upstart does not do very well, and they're trying to break into this market, but it's going to be very hard, is they have a very hard time with Prime members or Prime Plus members. And SoFi, that's where they do very good on, okay? So Upstart, essentially the way that they've done their business is they can go in and say, this person who seems like they have a 600 credit score or 580 or something like this might seem like a risk to some institutions, but we actually do think they're going to pay back based on these 10,000 different data points. But if you have a, very high credit score, you're in 820, something like this, but yet you still need potential money for, I don't know, kitchen renovation, something like this, that Upstart might have a hard time of understanding what your risk actually is. And so I actually completely believe this, that they would have quoted you way too high if what you're actually seeing from SoFi is potentially a really good understanding of your, ability to pay back at your credit box. So tell me if I'm right, if you have a high credit score, but that's what I would believe where you fall under. You're probably more of a high earner that's not spending a lot. You save more than you actually need, or save more than you actually spend, and that your credit score is probably 700 plus, 720 plus. SoFi or Upstart has very bad rates. Yeah, so the problem is you could say they have very bad rates, but they actually have very good rates if your alternative is no credit at all. Okay? That's really where they're good, is that they'll offer you a loan whenever other people won't. But if you do, like, that's the thing with the Prime Plus members, and why I think not a lot of people give SoFi a lot of credit, is that whenever you're dealing with these upstart members or a firm or something like this, they're trying to pick out of the basket the, all the tomatoes that have gone in the waste bin that might actually still be more ripe than potentially, like, those machines that like kick out the green tomatoes or whatever. There's still good. There's good eggs in that basket. But anyway, I changed from tomatoes to eggs. The thing is, though, with SoFi, everyone wants to give those people a loan. You're competing against the JP Morgans, the Bank of Americas. You're competing against the fintechs. Everyone wants a Prime Plus member. Okay. The fact that SoFi can end up giving those rates at much better, potential underwriting abilities than even the large institutions, the asset managers, or anything like this, is really where they stick out. All right. Cyber Ninja said, "What about Tesla? What should I do?" I'm going to stick to these companies for now. Yeah, do your own due diligence. Now, if we want to, I want to talk a little bit about Shopify. Many of you guys know this. Shopify is one of my largest companies in my portfolio. It's the second largest company in my portfolio, as Tesla has fallen back down, and Shopify has continued to climb back up. And I think that it's a misunderstood business. I don't think it gets nearly enough credit for, well, I mean, that's not true. It does get credit. I feel like retail doesn't understand Shopify as much as actually Wall Street does. I actually think Wall Street understands this business more than retail. And yeah, they are a decentralized, commerce platform that went from helping people set up their small online stores to now helping, B2B international businesses that also have a point of sale, direct to consumer, just the craziest, most complex solutions. They also have, potential ways of winning there. So this is essentially exactly what happened, right? They were just online helping with small merchants, and now you end up getting into every single company and size. And by the way, there is so much left to go, and they're killing it in total addressable markets. They're taking a market share. Their customers are like brand new customers are coming onto the platform, and very, very, very few are leaving. Okay. And they highlighted a lot of great things during the earnings call this time, where they were talking about how, Commerce Components by Shopify is actually bringing people on. So here, I'll highlight this. Let's see if we can find a slide on CCS. Maybe this will talk about it. Okay, so you can see it right here, but this is what I'm talking about, is Commerce Components, which you can see right here. But anyway, there's all of these different products that Shopify has to offer large enterprise clients. Whenever these people have such built out stacks for their e-commerce solutions, and potentially they have, different partnerships for shipping and marketing and offline solutions, and they've got CRMs over here and all these different tools that make up, their company. And so they are not ready to completely jump ship and transition over to Shopify. It would be way too much for a rip and replace. And so they ended up creating, probably not too long ago, 3 years ago, maybe a little bit longer, Commerce Components by Shopify, which is essentially offering the different tools that they have, both the front end, back end solutions. The one that's really picking up pace is just offering Shop Pay. So Shop Pay is their built-in consumer-facing product that allows people to have a seamless checkout, one-click checkout with any of the companies that are on Shopify. But there's 100 million users here. So how do you get, there's a lot of companies like Crocs, for example, was the one that they actually ended up highlighting this quarter, that wants Shop Pay. They want the ability for people to have a really high conversion rate and be satisfied with their purchase, but they don't want to transition everything over to Shopify right away. However, what they've realized is that they've started to go this CCS route, and that people realize the quality that Shopify is offering, how fast the team is, how good the products work, and then they dabble in another CCS product and another and another. And it's actually becoming a real rail for them to actually go from a few components to actually getting the full stack solution, because the quality of the product is just there. And so this is exactly what we see. And you also see companies that actually go from, a starter package, like they are just starting out on Shopify, and then eventually work their way into Shopify Plus, where, you can get the full stack solution. You're running a multi-million-dollar company, and things are going well, right? So, yeah, it's just, it's a very, very cool company. Shop Pay is doing well. One of the best things that Shopify does, probably better than any other company that I'm aware of, is that the companies that they end up partnering with them stay partners forever. Okay? Companies love working with Shopify. It's probably their greatest moat. And so, they can get all the advantages of working with these businesses, but it actually also helps Shopify as well. So yeah, they grow, the customers stay on their platform, they grow with Shopify. It's one of the best businesses that you could possibly own. Now, this was a new slide for me. This was very interesting. Obviously, you had the COVID bump of people starting new businesses, but then a lot of that really didn't go away. And that the amount of new business formations in the United States has just continued to stay very, very high. So yeah, I'm just in love with this business. Harley Finkelstein always talks about Shopify being this 100-year-old business, right? And by the way, they have some of the best management teams I've ever seen. Like this is one of the checklists on my growth investing framework of, what is the strength in the management team? Harley Finkelstein has the most unbelievable marketing background. I mean, like a literal genius whenever it comes to marketing. Okay. He didn't need Shopify. He was poached. Like every single company wanted Harley. And yet he went to Shopify because they had this, platform that he could grow very well. And Toby Lutke is unbelievable. Like, these are geniuses that work on this business. And Toby just works on the vision. He is so plain-minded, and like all they work on is the basics there, right? Make your product the best. Make your product the best. Like, just hyper focus on on having the best product. And if you can actually give a shit about your product and what you're actually offering, then people will transition regardless of price. They've actually started to toy around with pricing recently, and not toy around like, hey, bump it up 1% or 5% here or there. I'm talking 30% increases in the monthly rates, 25% increases, like across the board. So from basic all the way up to Shopify Plus even got a second bump, and yet institutions don't leave. There was no churn, right? They said the churn was nominal. People are paying the rate because there's nowhere else for them to go. Now, another big problem that people have is that, like, in certain other businesses, you can say, okay, well, Wix offers a really good solution. There's a Square Seller. There's all these different ones that I could set up a platform on. But if you're growing a company that's very fast, what you don't want is to potentially find a time where you're going viral and your website ends up crashing, right? So if there is a time, you see this a lot during Black Friday, Cyber Monday, where companies were actually, seeing tons of volume. They see this every single year. And a lot of those other companies that do not have the investment into their back ends end up crashing. Okay. People's websites go down. Shopify does not go down. They do not go down. Okay. So that's very important, because the different amounts that you pay on a monthly basis means nothing if you're expecting millions of dollars to flow through in terms of, just a good viral moment or a new product that you end up putting out that goes viral. Like Shark and Ninja see this all the time. So yeah, I'm just over the moon with this company. Even their incentives as a business are just so clean and clear. Like whenever you talk about banks or other institutions, there's a lot of like, okay, well, are they being greedy? Is there aspects where potentially their customers don't morally enjoy what they do, or maybe their incentives aren't aligned with their customers? Shopify makes most of their money not from uh, like subscription services, but actually just from the overall amount of like if you get paid, they get paid, right? So all of their incentives are aligned with their customers' incentives, which is to find them more sales, and they will take a piece of that. I find it just such a brilliant business. There is a million and one different ways that they can grow onto their platform, whether that's like right now, their big thing is grow through payments, grow through referral to other businesses. Like they see a lot of that through shipping services. But potentially this can go so much further down the line. Like potentially they get into financial services through banking. Obviously they're getting into Shopify balances, Shopify credit, but maybe they start doing that on the consumer side. Like there's just an endless possibilities for them to continue to grow. It's very exciting. The market share gain is crazy. They're at 12% of the US e-commerce market. That's up from 10%. It's nuts. I use Shopify every day. It's an incredible platform. Yeah. And you should see, like they move fast. People always talk about innovation that they see at Robinhood. Oh, wow, they put out products like crazy. The original guys are Shopify. Look at what Shopify is doing. Then you'll see they do a sort of an update every 6 months called Shopify Editions, the things that they've been working on over the last little bit. And it is just pumping out so many new services. And the thing is that they've actually gotten so good on a basic level for putting out these products. I mean, unlike their last edition, which was the boring edition, which was going back to the basics. But a lot of the products that they're actually putting out are to service, enterprise solutions and helping with international tax. I don't know. I'm head over heels. Shopify has shady execs. Oh, buddy. I disagree. I love, love, love Shopify. I'll own this company till I'm retired. I'll be holding this company for 40 more years. And you know what? It's going to make me so much money. So much. Do you like them that much because they are from Canada? So this is the only Canadian company that I own. Okay. I actually think that a large reason why they're not doing even better is because they are Canadian. This is almost like the Oracle of Omaha type thing, like insane growth in the face of not doing the traditional route, like almost like Warren Buffett not on Wall Street or something like this. Like the only way that you end up growing in a sort of technology space in Canada, becoming the largest Canadian company, in our country, is just by insane execution every single month. So I don't think that that's a benefit to them. I think that's a detraction from, their strengths. But they are too good that it doesn't even remotely stop them. The CEO is one of a kind, 100%. 100%. Okay, let's see here. Ottawa created and proud. Yeah, another thing that so Shopify, it's not like they come without mistakes. So they actually tried doing their own logistics business. They ended up acquiring this company. They just recently divested from it. I think they gave it over to Flexport, actually. And they still have a very good relationship with the team over at Flexport. In fact, they actually just brought back their founder, Ryan. What's his name? Someone will tell me. Anyway, But now they are just going back to the basics. And this is what Wall Street is loving. I think that this is why Wall Street loves this company more than retail, is that they don't pitch their story enough, or at least the way that retail wants to hear it, but they pitch it to Wall Street very easily. The unbelievable compounding effects that they have in terms of not only are they growing super fast, continue to do that, but they're getting tighter and tighter and tighter, and they keep tightening this belt, and it's just crazy compounding. Free cash flow is growing through this freaking ceiling. Things are going great. So, yeah, there you go. And like I said at the beginning, Shopify is usually crashing after Q4, not because Q4 holiday spend isn't strong. Everyone knows this, but it's about the guidance that ends up coming through in Q1, which, it's not, they're not throwing up Q4 numbers here, but it wasn't as bad as what people ended up thinking. They cleared up a lot of this anxiety in the earnings call, and the stock came back. So the fact that they closed out positively here, I think that they have a lot more to run. And I think that we'll see a lot more very large businesses. And here's the thing, like, whenever people think about Shopify, I think that the large majority of the overall amount of customers and like their TAM is just completely untouched. Like the large businesses, yes, they've started to get on like Nike's strength and everything like this, but like, start bringing over the massive brands, like the unbelievably massive brands. They will come to Shopify. I completely believe that. Salesforce Commerce has done well here. There's been a couple of these that have done well traditionally. They're losing. They lose every quarter to Shopify. They take market share from all the big players all the time. And I just think that that's going to continue to happen. And it's not because that they can't also, advance their systems on their end. But if you have a faster rate of change in one company for the betterment of the user, what does that look like over 3 months? What does that look like over 12? What does that look like over 4 years, 10 years? Like, this is why they're gaining market share. And it's not just going to be for the small candle companies. It's going to be for the largest commerce businesses in the entire world. And commerce, not e-commerce, commerce. They're going to do well offline as well. Eric in chat says, Noto's terrible, and look at Upstart, a real CEO. All right. I'd take SoFi management over Upstart's 10 out of 10 times. No offense to the guys over there, but I mean, they would probably say it as well. They're pretty amateur league. Okay. The guy who opened the Shopify earnings call was really selling their quarter and year. I mean, that's Harley. Harley is their, like, the president of the company. He's the spokesperson. He's the person that does all the talking. He's not even the CEO, which is interesting. Toby doesn't show up to that stuff. I'll show you what Harley looks like. This dude is a marketing genius, like a marketing genius. It's where he made all of his money, by the way.
Here, and I just wrapped up Shopify's Q4 2024 earnings call. And there was a lot said on the call, so I want to jump on here and break it down for you. When we were recording the earnings script a couple days ago, I literally paused, and you actually can hear it on the call, because when I saw what we accomplished, I was truly taken aback. Q4 was an incredible quarter, and even more importantly, 2024 was an exceptional year overall. So top line, here are some of the highlights from the entire year in 2024. Shopify was just shy of $300 billion in GMV. That is a reflection of how well our merchants did. And we did $9 billion of revenue for the year. Now, to put that into perspective, that's nearly 2.5x more GMV and 3x more revenue than we did in 2020. And what's more impressive with those results is we did all this while managing operating expense growth. Our operating income surpassed $1 billion, which is 12x more than it was in 2020. Our thriving partner ecosystem, which, as many of you know, is very important to me, continues to be one of our greatest strengths. This past year, we paid out $1 billion to partners for apps benefiting our merchants. And also this year, we hit 1 trillion with a T, in cumulative GMV. And over 875 million people bought something from a Shopify merchant's online store. That is like 1 in every 6 internet users. That just shows the scale of our impact. And to that point, I'm incredibly proud to say that Shopify is now over 12% of the e-commerce market in the US. Now, let's not overlook Q4. We absolutely crushed it. A few things that really stood out for me were, 1, our impressive Q4 GMV, which hit $94.5 billion. Next, the fact that our revenue grew 31% and our free cash flow margin was 22%, which marks 6 consecutive quarters of double-digit free cash flow margin. And finally, I'm insanely proud that our merchants had their biggest Black Friday Cyber Monday weekend ever, hitting $11.5 billion in GMV. On the earnings call that we did this time last year, we laid out exactly what we were going to do in 2024. And today, I'm here to tell you that we achieved it. 2024 is one of the strongest and the most balanced years across all aspects of our business in our 20-year history. So let me be clear. As we move forward, we are not just looking at the next quarter. We are focused on the big picture, which is building a durable 100-year company. We are focused on making commerce better for everyone at every size of merchant, from entrepreneur to enterprise, because we succeed when our merchants succeed. So thank you to everyone at Shopify, our partners, our community, and most importantly, to our incredible merchants for another exceptional quarter and an outstanding 2024. What you are seeing is the best version of Shopify to date, and we're still just getting started.
I don't know. I was covering Shopify during 2020. That was a pretty good time as well. But yeah, it is very exciting. Now, I saw some comments here in the chat, and I think Paul actually cleared them up as well. But it is crazy how much, bad sentiment can come in on SoFi's case. If I could just really cover them here. Where was this? Okay, it was Buck. Where's Buck's comment? Did it get deleted or something? It said something along the lines of SoFi is going to keep diluting. I don't know why. Oh, sorry. Here it is. SoFi will dilute shareholders soon. $20 is years away. I would bet a lot of money that SoFi hits $20 this year. A lot of money. We are not far off from 20 here. Okay. SoFi literally just said in the Fireside chat, like Paul said, that he cleared this up. He said, hey, you know what? We like where our capital ratios are. We're not going to be doing a capital raise. These Wall Street analysts need to learn how to read a balance sheet. Q1, Q4 was supposed to be a huge quarter, and it was a dud. No, it wasn't. No, it wasn't at all. Dude, like, the quarter that SoFi ended up putting out was way big, was a massive surprise to the upside. Okay? People got really, blindsided on their 2025 outlook because it seemed like EPS was super low whenever they did not clarify that the objective of 2025 was to be growth on. They didn't say that in the earnings. They ended up saying that in the CNBC interview later the exact same day. So this is why everyone's saying that they are doing great. The execution is perfect, but it's just a matter of bad communication skills. But this is why everyone gets reinvigorated whenever we see these fireside chats, because whenever we get to hear Noto, we're like, oh, you know what? We're back on Team SoFi. But whether or not they speak, it doesn't mean that the underlying thing isn't happening, So it's good for our psyche. If they talk, it's bad whenever they don't. That's fine, okay? But the company is going to continue to grow whether we hear from them or not. And this is why I just try to promote as much as possible long-term, patient investing, okay? Buy companies that have executed for years, because the high likelihood is that they will continue to execute if the management, if the product, or if the underlying business stays the same, if there's no massive headwinds that change. These sort of things, like that has happened to SoFi, and yet they've still grown. Okay, how do you grow year over year whenever you lose your biggest product line? Show me the business that's done that other than SoFi. Let's see here. Everything SoFi has done won't benefit until 2026, right? No, not true. No. So I think what you're talking about is potentially the loan platform, or sorry, not the loan platform business, the tech platform might not see a lot of benefits going forward. But this is the thing that Anthony Noto is trying to clear up is like, who cares about the tech platform business growing at mid-teens rates before, or even 25% rates at a 30% contribution margin? The loan platform business seems to have 60+% contribution margin rates growing way faster. So who cares where the money is coming in from? If they transition from one product to another, that doesn't mean that that product is dead. Student loans, we transitioned completely away from student loans and into personal loans. And it's like every single person is going, oh my God, student loans are dead. That's essentially what people are saying right now. The tech platform is dead. You might as well have said student loans are dead. Okay, it'll be back. In the meantime, we're going to grow all of these other facets of the business. You know? Um, little buying opportunity in Shift 4 today. Yeah, I'm excited about their investor day. I'll be there in person. I'm going to try to talk to everyone there. What I really want to ask Jared is if he's going to be sticking around in some sort of advisory role. That's my biggest question. That would be by far my biggest question. How about the level one option statement? I mean, it's what we suspected, right? If they thought that there was a big opportunity there, they would go after it. I just disagree with them. You know, I think that they could capture a larger audience of active traders. They potentially think that there's not a need for that, but it just sucks because the people that are on here are into level one options, and they would keep their money with SoFi if they, offered those products. But he said, "Hey, you know what? We have bigger fish to fry. You have more data than me. I'm not suggesting that I'm right and they're wrong. It's just personally the product that I would want." And so that's my own bias. But I'm not the type of person to not buy some like Lululemon because they're making money selling female clothes, and I'm saying, "Oh, well, I wear a men's medium," or like, what, they're not selling me my clothes? Well, no, but money's money. So if they can find money in financial services elsewhere, which I mean, it's growing at 80+%. Like, it's not like they're not growing. They're doing fine. Uh, it's just not the products that I want. I'm not into robo advisory. I'm not into the products that they're into, but they're making money. Um, let's see here. Well, you know what? I think that this is not the way that I'm looking at it. I think that if you want a very good approach to like active trader markets, obviously Robinhood's the better bet than SoFi. But it doesn't mean that because Robinhood's better, then they should not have developed SoFi Invest at all. No, they still should have a product for the people that don't care actively that much. But those people could still be level one options, long-term investors. I use a platform that's very similar to SoFi Invest. I am able to write covered calls on the platform that I'm on. I'm a long-term investor. Both those products seem to fit my base. I don't need crazy charts or able to do technical analysis or something like this. I don't play in that market. But I have, a large equity portfolio, or well, for me, and I'd want to write options on that if I wanted to, if I was at SoFi, you know? You know what's so funny about this? Obviously, I don't own the Lululemon leggings, but I actually have been buying a lot of Lulu clothes, and like it's actually very funny. They actually do sell a lot of men's clothing now, and my girlfriend. Well, it's not like I'm going there. I've never shopped for clothes in the longest time, but my girlfriend came home with this shirt and with these pants, and she didn't even tell me where it was from. And I was putting it on. I was like, "This is the best quality clothes I've ever had in my life." And then she's like, "Yeah, it's all Lulu." And I'm like, "Oh my God." like that quarter zip that I was wearing in my last live stream. That's a Lululemon quarter zip. I would never have known. There's no logos all over it. Obviously, they know men's clothing. They're not going to slap Lululemon logos all over it. But yeah, no tight pants. But they have those like ABC pants. They feel like sweatpants, but they look like dress pants. I don't know if I could show you guys. The only problem is it's Lulu, right? So it's kind of expensive, but they just look like regular pants. Everyone thinks that they're going to be like, crazy or something. It's not. Here. It's just dress pants. They're just pants. But yeah. If you're so confident in SoFi hitting $20, why not buy more at these levels? Well, I'm very confident in a lot of companies going up, and I'm very confident in NVIDIA getting to, 250. I'm very confident in a lot of companies doing very great things. So I don't want to extend my positions in certain companies. I'm sure I will continue to buy more SoFi. I just haven't yet. And it's very close. I mean, in the $14 ranges, I'm very close to being a purchaser. I'm probably buying the 13s or 12s, something like this. But it's a large position for me. I get 25% off Lulu online and in-store. Well, Jesse, start sending me some ABC pants. $700 quarter zip. Well, that's the thing, right? I'm not the type of person at all to be buying some I'm not a luxury guy. I like premium. I find Lulu falls into premium. And what I mean by that is like, if they're going to have better clothes for the sake of it being a better product, I'm fine with paying more. If it's more expensive because there's a logo and people say that there's some cultural significance behind that logo, I do not care. Okay? So that's the difference between luxury and premium. I'll buy a really nice toilet that has heated seats and a bidet or whatever, comes with all the features, but I don't want a golden toilet because it's just shines and it's more expensive, I'm sure, but it doesn't do anything. I'd prefer the things with all the gadgets, the bells and the whistles, and I find that Lulu might actually be that. You're buying quality. Yeah, it's the same reason why, I've never really gotten to LVMH. I just don't align with that type of, with those types of products. They've never gotten me. I don't care. But I mean, obviously, there still is like a lot of things to be said about as people get more affluent, then they can afford these types of things. So LVMH is, destined to grow. Whatever. I just think, I'll invest in the things that I know, and that's, yeah. Okay. Buck, it was not a huge letdown at all. They beat our numbers across the board. Okay, the only part that it was a letdown on was the tech platform. The tech platform, I expected 110 million or 112 million. We got 102 or something. So it missed by 10. That was a letdown. But that's not true that it was a it was a letdown the whole quarter. It wasn't. The outlook was definitely a letdown at first because we didn't understand why EPS was so low. I thought that they were being way too conservative. I don't like the fact that they're conservative. That part is a communication issue, though, not an execution issue. Okay? So everyone gets this confused. I don't like the way that management talks to retail or talks to their investor base. I don't like the way that they are so conservative on all their quarters. That has nothing to do with their actual execution. They have executed. They have. I've never been mad at a single quarter. Not one. Ladies and gentlemen, the Robinhood quarter tomorrow is going to be so exciting. I think it'll blow your minds. I think I'm going to be doing a live stream with Roy and Amit, and that's going to be a lot of fun. Tanner, what may cause SoFi to drop to the range of 12 to 13? I'm not 100% sure. Actually, what that actually does bring me to, very funnily, is that Upstart actually projected 0 rate cuts. I think SoFi said 1.5 is what their projection was. So between 1 or 2 rate cuts this year. So that might actually make them drop lower if their projections for full year 2025 are wrong. You know, that means that they would be, not too conservative. That would have been a little bit too bullish. But even then, I still think that they would beat their earnings. Like that's how conservative they are with their actual numbers. But yeah. Patrick says, glad you gave Shopify some love. No problem, Patrick. I know that you probably wanted me to do the live stream this morning, but I wasn't getting up. Tanner, any thoughts on AMD? Yeah, buy the bigger brother NVIDIA. I think you probably don't like AMD as much as you like the market. And I'm just a big better of buying the winner. And I've been an NVIDIA shareholder for a long time, so I just know them very well. I feel comfortable with their products. Should I sell my Upstart position tomorrow and buy more SoFi MM? You know I'm not going to say anything along those lines. You do you, baby. All right. Ladies and gentlemen, thank you all so much for watching. If you want to support the channel, hit the subscribe button. If you want to join the Discord, there's a link down below where people are talking about all the news the second it comes out. So you don't even have to wait till 8:30 to find the news that we're talking about today because it's shared live on the Discord. Make sure you guys check that out, the Future Investing official Discord. Thank you all so much for watching. Really do appreciate your time. But bye for now.